For some context and perspective, let's talk with our Anthony Mason. Anthony, we were here talking about this about a week ago. The concern was China, and China again is the concern today.
I think this is going to be bothering the markets for a little while yet. When you see a move as steep as we had last week, that 1,000-point drop, the market takes a little while to work itself out and feel steady again. This goes back to the same things that had people worried last week. We got a manufacturing number out of China for August that showed the sharpest contraction since 2009. The export numbers out of Korea came in. They were down 14%. These are the kind of things that have people thinking, wait a minute, is the whole global economy slowing down? And if so, what does that mean for our economy? And you have the markets trying to process all this information and having doubts. And that's why we see numbers like we see this morning.
So when it comes to oil, that's down 3 to 4%. What does that mean in terms of the big picture?
You had a big spike up in oil after you had a big sharp drop in oil. Oil is a reflection of where the global economy is. Oil prices start to go up when demand goes up. But oil had been dropping because the fear was the global economy was dropping. But now you have two things coming out. One, OPEC is hinting it might cut back on production finally after resisting that for a long time. And the second thing is U.S. production estimates came in and they were a little weaker than previously thought. So those two things are suggesting oil price, there may be a push back up on oil prices. We're still at very low levels, just above $40 a barrel here. So, for drivers, the key thing here is that, gas prices are going to remain low for a while yet.
What about when you look at this drop here? For some context, it was a 6% drop last week, about 1,000, a little bit more than 1,000 points that we saw the Dow drop. So that was 6%. We talked to analysts who talked about the C word. Oh, this is part of a correction. And this is to be expected when you've had this continuing growth. The question a lot of people have is, does the market have to drop to 10% for that to be a full correction, or how far can this go?
Generally, a market correction is understood to be 10%, and a correction is the right word. It's a drop in the middle of a rally, and then generally it's like a cleansing period where all the prices adjust, everybody takes a look, and then the rally resumes. That's the feeling. What you're hearing from analysts is that fundamentally the U.S. economy has not changed in the last 2 weeks. What they're worried about is a potential slump in China that decreases demand globally. And if China is buying less, that means other countries around the world are earning less, and that's less money they have to spend even here as well.
And as you mentioned, it's a little bit like deja vu. So is the advice, does that stay the same as well?
I think so. I think whenever the market goes through a rough period like this, it's not like it ends all of a sudden. There are little aftershocks where we had one, I think you could even call it a panic on Monday when the market dropped 1,000 points. It was certainly, a moment where everybody was like, we got to get out. Then everything steadied, but there are always little moments afterwards where prices are still adjusting. And when you have volatility like this, it lingers for a while.
All right, Anthony Mason, thank you so much.